Welcome to the XY Advisor Podcast, a global community of financial advisors sharing and learning with one another to drive the positive evolution of financial advice. To get involved, go to xyadvisor.com or simply download the XY Advisor app. This podcast series is proudly brought to you by Russell Investments. With more than 80 years of experience, Russell Investments is a global investment solution partner dedicated to helping investors reach their long-term goals. Russell Investments specialize in multi-asset solutions that combine asset allocation, capital markets insights, factor exposure, manager research, and portfolio implementation. Welcome back to the XY Advisor Podcast. I'm Fraser Jack, and today we are into part 4 of our 5-part series on ESG investing. Today we're really looking at going a little bit deeper into what is the E, the environmental part, the social part, and the governance, and then also having a think about an overlay of what that looks like when you're having these conversations, prioritizing conversations with your clients, as well as the funds. Welcome back, Philip Moffat.
Hi, Fraser.
Thank you for joining us. Now, you're the perfect person to ask this question. So let's take a deeper dive into the environmental. Let's start with the E and then move on to the S and the G. Tell us what they are. Tell us how they work. Let's go a little bit deeper into what's involved in each part.
Yeah, well, look, I think at the top level they are what they say on the can. So we're thinking about how assets or businesses affect their environment. Loosely, I guess people think about the physical environment. So it's climate and land degradation and so on. And there are a bunch of kind of metrics and ideas that are popularly understood, like carbon footprint, right? Or soil quality or water use, and those things can be measured and reported on and compared. Social is a little more amorphous, I think, than environmental. Because social kind of means everything else, in a sense. And so that's how you interact with your community. It's the jobs you provide. It's who you employ. It's how you employ them. It's how you treat them, how you treat communities around your assets or businesses. And so it's somewhat harder to find metrics that are universally accepted and understood in that space. So it's a bit looser. And governance is really trying to have confidence that the reporting and understanding you're getting around social and environmental as well as financial returns from these assets is verifiable and comes at standards that you can accept and are acceptable to the marketplace. So the governance part's, in a sense, the cleanest.
So the governance part is, I guess, the part that's always sort of been around a lot of businesses because it's already been there. The environmental part, as you mentioned, there is a lot of measurements. It's a lot easier to measure. I want you to overlay the impact because you obviously do a lot of work in the space of impact investing. Is that mainly in that social area, do you find, or?
No, it's both. It's both. What we're really looking for is people get a bit confused, and I don't think the market's been very clear about what the difference between ESG, sustainability, and impact are. And if you ask 3 people, you might get 4 views. But to our mind, impacts are about outputs. So the outcomes from a business will have an impact on employment or the environment, and what an impact investor is doing is generally taking the UN SDGs, so a set of measures the UN has prioritised for businesses and assets to try and focus on to improve their social footprint, and trying to line up the outputs of the business with some of those SDGs, so that we can say, here's a business that's set out to reduce its carbon footprint, and this is the overall reduction in its footprint. ESG refers to more how they do it and what the processes are in place to get them there and how they're improving or not improving. So they go together, but they're different. And I guess our investment thesis is that because they go together, at the moment we focus on ESG more in the marketplace. It's a more readily understood concept. It goes better with sustainability. That's really the beating heart of improving businesses' social impact and valuation. And the impact they generate over time is going to be a convenient way, a convenient universal way of reporting what some of those improvements look like.
Yeah. Okay. So focusing a lot on those the outcomes of those improvements, and then being able to quantify and provide some messaging around these are what we're trying to do in the world.
Yes, exactly. And so eventually you have businesses or assets that can say to the marketplace, these are our practices. This is what we're trying to produce, a financial return, but we also are trying to produce a series of measurable outcomes that have an impact in our community. And it could be in employment. Number one is employment. The very best thing anyone or any organization can do is provide jobs. Jobs and income is top of the list from our perspective. It could be provide jobs. It could be provide jobs in certain sectors to certain sorts of people. It could be environmental. It could be educational. It could be health issues. Here are the things that we're going to measure and report on because they really matter to us. But the guts of the ESG is the operational machine rather than the output at the end.
Yep. Can you give us some other examples of impact businesses that are doing great in the space?
Strictly defined impact, people would talk about businesses that are set up with an objective of meeting some of those UN SDGs. So I don't even start my business without knowing what the end outcome is. We talk about theory of change and so on. And I'm sure you'll have some people on the podcast who talk about that stuff. I guess from our perspective as investors, from Beccon's perspective or my personal perspective, is that I'm not necessarily attracted to businesses that already know what those outcomes are. They are attractive. What I'm really attracted to is businesses or assets that have output at the end but don't really understand it, and they need to be taken on a journey, or they want to be taken on a journey to understand what those potential impacts are and how they can be measured. So I think about a really simple business we invested in, a business called Slurry Tub, where at the end of the day, when the builder washes out his concrete mixer, he hoses it out, that slurry is highly alkaline. It's supposed to go in an absorption pit and all sorts of stuff. And I'm sorry to say, lots of builders just tip it down the sewer, or they dump it on the grass and it finds its way into the water table, and it's full of heavy metals. It's dreadful, right? So an entrepreneurial builder bought us this idea of Slurry Tub, which is basically, think about a big coffee filter, plastic tray with a paper liner. You put the slurry into that. It captures all the heavy metals and all the alkaline debris and stuff, and out the bottom runs water. Beautiful. He bought us that idea knowing that it had an environmental impact, but also knowing that it was potentially going to drive a profitable business. He hadn't thought about measuring the heavy metals, hadn't thought about measuring the quantity of water. When we help him to measure those things, then he's got impact that he can report into the marketplace. But this is an impact naive business, really, that is a pure impact business. And so that's a great example of businesses that are set up to generate return and have a social impact that wouldn't originally qualify as impact, but really are, and how they can be taken on a journey to that reporting standard.
Yeah, fantastic example. Thank you for sharing that. Just lastly on this topic, as we go through advisors talking to their clients, and I just want to lean into the prioritization conversation because, it's in a perfect world we have, an equal quantity of E, S, and G, and that all works together, and the business does all those things. But look, tell us in reality how this works with clients prioritizing one over the other.
Yeah, well, there you go. So if you can improve your E at the cost of your S, do you do it? If you improve your S at the cost of your E, do you do it? Do you only improve both? Really difficult conversation, because it goes from taking a set of ideas that we all think are important, improving the environment or providing jobs or what have you, to I'm going to value this one above that one. And so the relative valuation of these different elements is something that nobody's going to agree on. I would guess that the optimal path for advisors and investors is to try and see a path forward on all, and to reject anything where you think a path forward on one leads to a degradation of the other. But you've also got to think that in the world of imperfect information and standards of reporting, if I'm a business that's going to improve my environmental impact at the cost of social, I might focus on the environmental impact and underplay the social. And that's why you need really rigorous due diligence around this stuff, and why the industry is really in its infancy around these valuation questions.
Yeah, fantastic. Thank you for adding those gems. Philip, we'll catch you in the next episode where we talk about supply and demand.
Okay, cool. Thanks, Fraser.
Welcome back to this episode, Elizabeth.
Thanks, Fraser, and thank you for the invite.
No problem. Now, this episode, we're talking about the idea of, prioritization. We're looking at the E, the S, and the G separately, and working out what sort of conversations are you having with your clients at the moment around, what they are. Do you go into each one? And if so, let's dive into that idea. What would you say to your clients that want to break down what is in the E, S, and G?
I usually say to them, is E, S and G, or ethical and sustainable and responsible investing, something that is an issue for them, and which bits of it are. So you actually need to ask clients the question. And the other thing I usually say is, and the response is usually, well, you tell me. And then my response is, well, this is a very individual thing. What's important to you in terms of ESG and being responsible is different to what's important for me. I use a fairly basic questionnaire that they can or can't fill in. And the reason for doing that is so that they can actually start to think about which one of these things is or isn't important.
What sort of things on your questionnaire?
Do you know if your super fund invests in, and which of these issues are important to you, what is or isn't, and what might or mightn't be important? My experience of this is that people fail to fill it out, and that the questions, which I think are fairly straightforward, are just too difficult for people to grapple with. And because they haven't thought about these things before and they don't want to. And usually when people talk about ESG and that they're wanting to invest in this type of fund or to divest of something else, it usually comes down to one or two issues. Like, what I'm interested in is forest degradation, so I don't want my funds going to anyone that does this sort of work. Or I'm really interested in human rights and I don't want my funds to go to anything that's is taking advantage of conditions in other part of the world, such as slavery. I have one client who is invested in something that's very, very that has done very well, but it has Rio in it, and he doesn't like Rio. Another client who didn't want to invest in the similar sort of fund because they had Woolworths, because Woolworths was then associated with pokies, which is not anymore. Those things are what really stuck with people. So it's incredibly individual. Some people are into animal rights. It's a matter of drilling down and saying, this is a fund or a series of funds or options that I think may be suitable, depending on what you've said. And so why don't you choose? I think that they're all similar in terms of what it is that you're wanting. Is there anything in particular?
And just on that, because I think the questionnaire is great to have some sort of a questionnaire that goes through a lot of those underlying aspects, like in not just environmental and or governance as the main headings, but going into like what is it, as you said, deforestation or climate change or greenhouse gas emissions, and in that questionnaire, because I'm just trying this on as a consumer, is this something that might be more along the lines of I don't want this and I don't want that, and therefore that pushes me, or is this more something that I guess depends on the person, but is it I do want this, like a towards motivation?
So the questionnaire is basically got, these are kind of like 10 major issues that have been identified as issues of concern. What do you think about them? I care, I don't care, or it doesn't make any difference. It goes along those sorts of lines.
Yep.
So saying it's quite difficult to find a product that fits everything that is that the client's wanting, and that there has to be some choice, and that people let go of, okay, well, if it's mostly what I want, then it'll be okay.
Yep. Okay. So it's if it doesn't have the things that they hate, that's the first step.
Yes.
And then if you're moving towards something that they do want, then that's sort of the second step. Is that what,
And taking into account that some of the biggest polluters, for example, in Australia, are moving down the track to become more green, and they're also funding initiatives to become better in terms of, environmental degradation. If they're moving along the right way and if they're actually demonstrating that this is what they're doing, is that good enough for you?
Yep. Okay. So it's just having those conversations with the client to work out.
And it can't be black and white.
Yep.
It's not black and white. Yeah.
You've sort of worked that out before, isn't it?
Yep.
There is no. It's all 50 shades, isn't it? There's no perfect solution here. It's around finding a balance.
Yep. That's right.
Fantastic. Thank you, Elizabeth, for coming on this episode. We look forward to chatting to you in the final episode of this series.
Okay. Thank you.
Thanks for joining us again, Paul Garner.
Thank you very much.
Now, in this episode, we are going deeper into the ES or G, I should say, and talking about how we talk to our clients about individual considerations and prioritization. Let's start with environmental.
Yeah, well, the process I go through is there's a series of it's like a fact find type of thing of pro forma based on environmental, societal, and governance issues. For instance, fossil fuels would be a specific environmental issue. Do they want to support that, avoid it, neutral about it, or want to know more about it? So we go through each environmental issue, and the individual indicates what their feelings are about that particular issue. From that vetting process, we gain a picture of what's important to them. What do they want to support in terms of invest more in? What do they want to avoid in and have nothing to do with? So from that picture, we then try to match that with what's available in the market, in general managed fund types of things. And if they don't, if there's no like off-the-shelf option for them, then it's up to us to design a very specific and customised portfolio to address what's important to them. That's not an original idea. That fact find. It's the Responsible Investment Association and my colleagues have all been very influential in developing that sort of vetting system.
Yeah, that makes sense. Now, with your little mini fact find regarding the ESG part, what sort of things are you bringing up in the environmental space? Obviously fossil fuels is one, but what else?
Yeah, that's a key one. The other is mining. Some people are dead against any mining. Others will tolerate gold, lithium, anything to do with the making of batteries, for instance, which is vital in that area. Logging, old growth forests, tobacco. Oh no, there's more of the societal area. Fossil fuels is the huge one. Renewables is the other support area that people are really concerned about on the environmental side.
Yep. So if we go environmental, if we just chunk into that, avoiding, say, fossil fuels, do you then also put your renewable energy as, to support? So do you have sort of both in your fact find?
Yeah, indeed.
Yep. Okay, so it's not just the fossil fuels of the world.
Yeah.
It's also the renewables and the positive ones, so they can actually say, no, I want to support that and I want to avoid that.
Indeed.
Yeah. Okay, great.
Indeed.
And if we go into the societal or social impact section, talk to us about what you have in there. What are the different sections?
Well, gambling is a key one, but also more niche issues like stem cell research, IVF, those sort of more medical, human types of areas. Genetic modification is a very hot topic. Gambling is always a big issue for most people. Alcohol, generally people are ambivalent about that because they enjoy that part of life. Yeah, that's more subjective. The governance side is...
Sorry, Paul, before we go to governance, is there anything around the human trafficking, human slavery or equality or rights?
Yeah, a huge issue on that in terms of slave labour, human trafficking, supply chain, that like how deep do you go to investigate those sorts of issues? Most people are wanting to avoid that or support vetting of that area. That's probably the biggest societal issue. Union, it's easier for us in an Australian context to take those things for granted, but when we're dealing in an international sense, it's very important, and also understanding where supply chains are going in those areas as well.
Yeah, supply chain's been the big one, hasn't it? It's been in the news a lot lately for, it's not just the company you deal with, it's the companies they deal with. Indeed. And how do they report on that and how do they display that? It's been a tricky task, I guess.
Yes, it is. And trickier also on in terms of assets allocation. It's much easier to vet those sorts of things with equity funds. But when you get into the fixed interest area, that can be very tough. But we're seeing more green fixed interest options being available. But that's a real tricky area in terms of where's that bank we're investing in lending their money.
Yeah, extremely difficult because it's probably not common knowledge.
No.
Fantastic. And so that's the social side. What about governance?
Governance is how does a company interacts with its community? How does it pay its executives? How does it pay its staff? Unionism. What are their voting? What's their corporate behaviour been like in terms of banks are a great example in terms of what industries are they funding. There's been a lot of talk about that and a lot of activism about that too. Most people are very supportive of all those corporate governance issues. They want to support companies who are being good corporate citizens, and that's reflected in how they treat their own staff, how they treat their suppliers, how they treat the different people in their supply chains, in their influence areas.
Yep. Now, this is an area that I'm sort of learning a little bit about, to be fair, because obviously I sort of came at this with the idea that governance was fairly here in Australia anyway. We've sort of got some good processes and reporting in place. We've got a lot of regulators keeping a close eye on a lot of these big businesses. We've seen the banks and others getting dragged in front of royal commissions and bits and pieces and healthcare and those sorts of things to help hold them accountable. So I sort of thought we had a fairly high set of standards of governance in this country and a few others. But I'm sort of learning a little bit along the way with regard to, being able to pick and choose within those companies that if they do find themselves or their behaviours are poor enough to find themselves in front of a royal commission, then avoiding those behaviours. Avoiding those businesses?
Yeah, look, again, it's such a subjective thing, and what comes out in the media can often be an overstatement of particular areas. The reputational damage that can be done. You just look at what happened to AMP. Behaviour in certain aspects of their company just reflected across the whole company. So it like how deep do you go? How generalized do you take these judgments? It's a tricky area, and it must be very difficult for companies to navigate through as well. But then you see the influence on the behaviour of the banks in terms of are they funding coal miners, for instance? And then you look at the political pressure that comes back on trying to dissolve that influence by creating political pressure about not having that influence over corporate decision making. So it's a fine line for major banks in that area in terms of how much they get political pressure on one side to open up funding, depending on what the government wants to do, and then they've got societal pressure saying, no, we don't want you to fund that sort of activity, and they're in the middle trying to make those decisions.
Yeah, it's interesting. I no way think it's an easy position to be in to have those conflicting concepts to coming at you and having to make a decision to keep everybody happy. Paul, thanks so much for sharing your thoughts and ideas around what you do in this space for helping clients understand, the things that are important to them. I really like the system that you have where it's, avoid, support, neutral, or more information. I think that's a great takeaway from this episode. So, Paul, thank you so much for being involved, and we'll see you in the next episode.
Thank you.
Welcome back to this episode, Alexandra.
Thanks so much, Fraser. Great to be here.
Fantastic. Now, we are talking about going a bit of a deeper dive into the ES or G conversation, and then after that, we'll have a chat about prioritization. Tell me, let's start with environmental. What are the big things you're seeing in this space and from both, advisors and fund managers and consumers?
Yeah, great question. With the environmental, what I've noticed more and more as well is that it's being separated into positive and negative environmental. Before it used to just be lumped into this whole like ES and G, and these are the environmental issues, but it's really being separated into what's harmful and controversial, and then also what's creating positive impact. So I love seeing that. And I think as far as the harmful areas go, there is the usual ones, animal cruelty and fossil fuels and environmental destruction and things like that. But I'm seeing more areas around things like palm oil and plastics and other forms of air, water and land pollution. And just referring to palm oil, I've got it in the environmental section, but it really does straddle the social aspect as well. And, a lot of people, when they think of palm oil, they just think of deforestation and clearing of land. But there are so many issues with women and children, especially in their supply chains and in their as workers as well. And it's horrific. A lot of social issues. But I guess turning to the environmental, the positive areas, what I'm seeing there is lots of things like clean transport, clean technology, energy efficiency, recycling, sustainable forestry, sustainable food systems, really big one too. And circular economy is coming out loud and clear now, which is basically it's based on the principles of designing out waste and pollution. So designing out waste and pollution, keeping products and materials in use in that cycle, and also regenerating natural systems.
Yeah, amazing. I like the idea that it's moving towards that negative and positive. It makes it really easy for a consumer to understand that and to be able to say whether they're for or against, or they feel strongly or not so strongly about those when it's presented as for and against, rather than just presented as a thing. How do you feel, positive, negative? I think it's easier to quantify their attitudes towards it. Talk to us about the social aspects. What are you seeing in that space?
So with social, again, if we're looking at the harmful, there's the typicals. There's, the alcohol, gambling, tobacco, weapons, pornography. They're usually like those big negative screens. A lot of them have been around for a long time, and advisors, possibly more aware of those things. But we're seeing a bit more of things like excessive consumerism becoming a bit more to the forefront, correctional and detention facilities as well, predatory finance, so that the buy now, pay later, and the payday lending and things like that. Sugar and junk food, a big social issue now as well, harmful when it comes to people's health. So that's more on the negative side.
Yeah, the predatory finance is a big thing, I think, for financial advisors. They would see a lot of that, obviously, with the buy now, pay laters and ending up with extra credit cards that you didn't even really want.
Absolutely, and then having to help the clients through that.
Fantastic. And what are you seeing on that positive side of social?
A lot more about equality and just human development in general, Indigenous rights, which is great to see a lot more of that. More of the social innovations, technologies, labour rights. Of course, the Sustainable Development Goals has got a huge portion of social aspects in there. Inclusive finance, so making sure that finance facilities are accessible to all. We take a lot for granted here that we have so many, we have such accessibility to finance, on our mobile phones and all that sort of thing, but that's not the same across the globe. And also gender diversity and gender balance as well is becoming to the forefront as well. Seeing some improvements, for instance, even just in the ASX 200 boards, according to the latest reports, which was July actually this year, about a third of ASX 200 boards are women, which is great. And unfortunately, there are still 2 boards on the ASX that don't have any women. But yeah, gender balance is becoming a big thing.
I think I saw something a few years ago that said there were more Peters in board roles than there were women. Blokes called Peter, and I thought that's oh my goodness.
Yeah.
Fantastic. Yeah, no, I agree with with a lot of that stuff. Tell us about the governance side, because this is that board role that board conversation also sort of fits into the governance space too, doesn't it?
Yeah, absolutely it does. So, what's happening internally? How is the company functioning? In the harmful, then we would look at things like, bribery, fraud and corruption, executive remuneration. So how much is the CEO getting paid compared to employees? Tax avoidance. So not just being smart about tax, but actually, finding those loopholes and really avoiding tax that they shouldn't be avoiding. And obviously, and even just greenwashing from a company perspective as well is definitely in that harmful governance realm. As far as the positive governance goes, seeing more of a look at long-termism. So does the board take a long-term approach? Are they looking at sustainability? Are they incorporating business model resilience? Those types of things. More transparent disclosure, stakeholder engagement. Are they communicating and working with employees and communities and suppliers and customers? And Indigenous consent is a huge one, particularly around what we've seen with Rio Tinto as well and Juukan Gorge, just having companies boards that have a positive impact when it comes to respecting Indigenous consent are of course going to be seen as being better or better in the ESG realm.
Yep. Now that we've just listed off, a stack of different concepts when it comes to the 3 different areas, and let's call it the 6 different areas because there's a negative and positive in each one. Yeah. Then how does the advisor then have those conversations with their clients? And you sort of touched on this in the previous episode, but there's prioritization point of view where you say, well, you can't have everything. Surely, if you have everything, there's not going to be any funds left to recommend, or any companies left to recommend. How do we have that prioritization conversation with the clients?
Yeah, sure. There's two things I probably want to discuss here, Fraser. And the first is, I get a lot of advisors there asking me, so, well, there's so many there. What do I learn first? Kind of thing. And so from a learning perspective, I guess, fossil fuels and climate change risk, they're just the 2 big ones. And biodiversity actually risk is becoming huge too. But, I'm a lover of research and stats, and so of course I went to it's a consumer survey by RIA, and in the report it looked at, and this should be interesting for advisors too, but the top 3 social and environmental issues or themes that Australian investors, so potentially your clients, want to support are renewable energy and energy efficiency, sustainable water management and use, and healthcare and medical products. So those top 3 issues: renewables, sustainable water, and healthcare. And the top 3 issues that they wanted to avoid in this report is animal cruelty, tobacco, and weapons. So, getting your head around these things is clearly important to Australian investors. And the other report they had in their benchmark report, they actually used their responsible returns tool. There's an advisor interface as well that you can go and you can check out all the certified products there. But people can go to their tool and put in things that they want to exclude, and it shows them a list of products based on what they want to screen out. And the 3 most frequently used exclusionary screens: fossil fuels, human rights abuses, and armaments. So we have it's just, it'll be different as I said, that's 3 examples. Actually, Ethos, they did another one too. Theirs was global, using that same system of taking data from the screens that that they were using, which is the top causes that investors care about. Number 1, climate action. Number 2, sustainable resource use. And number 3, gender equality. And it was really interesting to see that, we got a social aspect in there as well, because they're generally it's usually based on environmental.
Yeah, that is fantastic. And you mentioned Ethos, which is of course a product that neither of us are endorsed by the way. That talks about or helps with that conversation of prioritising. We've also spoken on some of the previous people that have talked about this around what can be done with regards to the questioning for clients, and there's some stuff obviously from RIA and from the co-op that talk about questioning techniques. What do you sort of talk to your clients when you're training them and teaching them to use as that needs analysis, or that that idea of understanding what the client's prioritising?
Yeah, great question, Fraser. And, for advisors, I've mentioned questionnaire a number of times because I really would suggest that this conversation is done using a questionnaire that covers, ESG concerns and what matters most to a client. And, just as advisors would obtain their client's risk profile, they're just going to find out their ESG or their responsible investing profile. So alongside a questionnaire, then you've got obviously the funds too, the research providers. So I would try and match the questionnaire with the product providers to make it easier for you. So you're never going to find products that exactly match. There's going to be issues that are important to your client that aren't going to match the products. But what I'm seeing more of now is, when you've got a questionnaire, is using more of a ranking system when it comes to profiling your clients. So I know that we have mentioned Ethos just one more time, but, on their platform, they do have in the list of issues, the user can actually move them around. It's like a ladder, and the client can actually move them around to work out which is the most important, and that would sit at the top. I provide advisors that I work with, that I'm consulting with, a questionnaire too that also uses a ranking style system, in that I would have all the ESG issues listed in that positive and negative to make it easier for advisor and client. And then 1 to 5 on the other side, where 5 is this issue is really important to me, and 1 is I'm not so fussed about this issue, and obviously in between. And as an advisor, if you go through with your client using this questionnaire, pay attention to those number 5s. Those issues that are really important to them are the ones that you want to focus on when you're trying to match a product with their values and their concerns.
Yeah, fantastic. And the whole idea of prioritisation is the fact that not everything can be a 5.
No, that is correct. And you will get clients that will literally just tick the 5s all the way down.
Yep.
Just to finish off, I've just got a couple of tips to help advisors with client ESG discussions. And the first one is, it's okay to not have the answer. So it's too hard to be an expert in all areas. It's, it's not your job to be an expert in all things ESG, but just enough to form the structure of your advice, and just see this as a growth journey. Number 2 is that your clients will want to bring their expertise to the table. So if a client is particularly passionate about an issue, they are going to be a great source of information. They're going to be a great resource for you, and they are going to want to bring their expertise to you. 3 is that there's no investment option that's perfect. It's really just a matter about being upfront and transparent around any issues that you might find. And my 4th tip is just to review your clients' preferences regularly, because they are likely to change over time.
Yeah, fantastic. Thanks, Alexandra, for coming on and going through that with us. That was really great. I really appreciate it, and I look forward to catching you in the next episode when we talk about supply and demand.
Thanks so much, Fraser.
James Howard, thanks for joining us again as we dive a little bit deeper into the ES or G prioritisation conversation. Welcome.
Thanks, Fraser. Good to be back.
Fantastic to have you now. So we've been tackling this concept of, let's go through and have a look at what some of the environmental factors are, the social factors that are important to both fund managers as yourself and also for clients. And as we go through there, we're just sort of looking also around the prioritization of how we have those conversations. So let's start with the E, the environmental side of things. What's important for you in this space?
Yeah, look, I'd probably focus on two things here, Fraser. So I've spoken in previous sessions about carbon emissions, and carbon emissions data is actually really quite good now. So that's something that we measure all of our funds at Russell. We measure the fund's carbon footprint relative to its benchmark, both for Australian and global shares. And similarly in the low carbon strategies that I run, they've all got specific objectives or specific reductions that we're looking to hit versus the benchmark. So that's kind of I would say that's a fairly common theme that you'll see in a lot of superannuation funds as well. The other area would be around green energy. So this is an area that I find particularly interesting. Clearly, energy production is a big part of that carbon emissions, and the emissions that we're releasing into the atmosphere every year. What we're seeing is utility companies around the world becoming more green. And as a result, a few years ago, we developed a green energy ratio for a lot of these utility companies. And that is a measure of how much of the energy they're producing is coming from renewable sources. And I think we spoke in the last session about positive tilts. That's an example of a positive tilt we use in our low carbon strategies. So we want to have more exposure to those companies that are producing more and more energy from renewables. And I might just I think I also mentioned AGL and how that company is separating into a green versus fossil fuel division. A good example here is a Danish utility called Ørsted. That was a fossil fuel based utility provider a few years ago, and over the years that I've been involved in ESG investing, we've seen Ørsted's green energy ratio go from quite low numbers to well in the 90s percent wise, and it's a company that's done really well relative to other utility stocks, and I think talks to that's where investors are positioning. They're positioning for these companies that are transitioning for a more sustainable and lower carbon future.
Yep. Now, when companies do that, this is a really interesting part because obviously, you look at an AGL or an Ørsted, if they take their fossil fuels and they divest that into a different company, that the fuels are still being emitted, are they not? Is that still obviously the money's being diverted for the green funds to the new entity and promoting that. And we're assuming the old one's going to die off over time and investment will run out?
Yeah, look, there's another metric, so-called carbon reserves or fossil fuel reserves, and that's the coal, oil and gas assets that these companies have on their balance sheets that are still in the ground and yet to be mined. There is a belief that a lot of those will become so-called stranded assets because of Paris commitments. We've got COP26, which I'm sure we'll hear more and more about over the course of this year in November, where all governments from around the world are meeting again on climate change. So I think the reality is that a lot of those fossil fuel assets will become stranded and won't be mined and burned. So yes, whilst they have them on their balance sheet, many companies are either trying to sell them off or simply write them down to zero, which we've seen as well. So it's certainly an aspect to be aware of. But I think what we're really looking to do is what we want to see is those companies positioning for the future.
Yep. And this is, again, as you mentioned in the previous episode, this is an influential position to be in as, the investment manager, as well as investors, as well as consumers, to be able to influence how these companies behave in the future.
Yeah. Yeah.
Fantastic. Now let's talk about social, the S, the social impact and what are you seeing in that space with companies?
Yeah, I think it's in a way it's a harder one to measure and manage, but definitely one that is becoming more of a focus for consumers, and I think that's where engagement with companies and meeting with them and understanding their approach to social issues is more and more important. So probably a good example would be how if a company is transitioning, how they're managing the workforce that might be displaced. So the concept of just transition. So there's many parts of Australia that rely on these kind of industries, trying to manage that that change of business model while still supporting local communities is obviously it's a fine balance to get that right. But in many instances, there are also say in the Hunter Valley, there will be farm like solar farms, and there will be jobs that get created in other areas. So I think that's kind of one aspect of the social side of things from the environment, the energy side of things. Other areas would be focusing on education and healthcare, and I think we can move portfolios into some of those areas that naturally have a greater focus on the social side of investing.
Yep, and I kind of feel like in Australia, with obviously with local government regulations, and we've sort of been in an economy that's looked after the conditions of workers for probably a lot better than a lot of countries in our region. Is this something that we're finding? You find that with the social side of this, that Australian companies are stronger than say some of the global companies?
I think it's certainly it's a bigger focus. I think partly some of the investor groups they are looking for just transitions as well. I think it's also supported by the government in that regard. So whilst I don't think our government is necessarily doing a fantastic job on climate change, I think that there is a support for the investors, sorry, the employees to really support them, and it's a fine balance. But yeah, definitely it's a key part of the conversation for any any company involved in that transition type of area.
Yep, and we sort of covered off on governance with some of the earlier episodes. We talked about that. Obviously, governance has been around for a long time. It's not a new part of this conversation. It's always been there with regard to investment managers looking at the governance of a business. But from your point of view, how do we start to prioritise over when we're talking about an ESG portfolio or a green portfolio? How do we start to then try and work out how we can bring all three together, or because often they'd be prioritising one over the other?
Yeah, look. I think what you're finding now is that the ESG, if you look at any company, if you click on their website, there's almost certainly going to be a link to their sustainability report or their governance report. So it's definitely not an area that they're not mutually exclusive. I think that a lot of these things are tied quite closely together. Governance, the focus on proxy voting, how investors are voting has never been as great. So I think that used to be a almost forgotten part of investing, but now there's a much greater focus on that, and obviously when we're voting, it's across all of those areas. So I think it's naturally becoming ESG is becoming a merged type of concept, particularly on the governance side and the voting.
Yep. And when advisors are talking to their clients, how should they go about that conversation around looking at an individual client and how they can sort of prioritise for that client around those E, S, and G topics?
Yeah, look, one concept I've spoken about before is the Responsible Investment Association of Australia, or RIA is the shortened term. RIA is so they certify products, really more the ESG specific products. So our ESG ETF RARI is certified by RIA, as are our low carbon strategies. These all have specific ESG focuses and objectives, and the RIA website actually is a useful tool for advisors in that there's a tool that they can screen for products that match their requirements. So, both on the negative screens and the positive side. So that's probably the best toolkit that I can suggest to advisors. Have a look at the RIA website and their certification tool. It can really help advisors identify products that match the requirements of their clients.
Fantastic, James. Thanks for coming on this episode. We look forward to catching you in the next episode where we get into the supply and demand conversation. I look forward to that.
Thanks, Fraser.